Investors and traders, welcome to the channel. Today is 2nd of February 2024. I hope everyone is having a great day. So it's gonna be a pretty short video. We are going to take a look at the key US stock indices and key markets that we always do for this segment. So we will start with the bond market. Okay, and today was the non-farm payrolls. I believe the figures came out stronger than expected, so the job market seems to be pretty resilient. And what that could imply is that the Federal Reserve might actually be not aggressively cutting rates. And as they mentioned in their FOMC meetings, they're more data dependent. So certainly that's one data point. And also, what it means is that if things remain robust in the economy, and there could be things which could actually influence the inflation, which could actually stay where it is or move a little bit higher, the Federal Reserve would be more inclined to keep the rates higher or at where they are for longer, in order to be able to fight the inflation and bring it down towards their goal, which is 2% longer term for the CPI. They also look at the core PCE figures, so that's another data point which is pretty important to watch as well. So in terms of the action, that what we have seen is today, here we can see that the bonds actually sold off, and it's a pretty big sell-off. They sold off um, well well over a point, getting close to 2 points actually, so 1 full point in 24 seconds. That's pretty big, and actually they sold off in terms of percentage point 1.41%. That's a fairly big amount for this market, especially a market which is that big. um, and from the perspective of looking at from the patterns, the market has actually been hovering around the 61.8% Fibonacci retracement. So let me actually show it around here on the weekly chart. We can see that the market actually touched the 61.8% Fibonacci retracement. That's the bearish symmetry line here. Um, and for a week, it was a little bit higher, but then we have seen the market actually pull back, and then going back to the daily chart, where did it pull back to? It came up very close to this 38.2% Fibonacci retracement level that we were watching. In fact, I personally thought we might actually get there, but we did not. And there's still a chance maybe it actually goes and retrace and test these lows again. But we have seen a fairly nice move to the upside. And where is that move uh, reached till? Right to the, I believe it went to the 78.6% retracement. Excuse me, I think I've got the um, okay, I'm not able to draw, so I believe it did go to 78.6% Fibonacci retracement level, and what we have seen today is a bigger pullback. Now, if we look at the 10-year Treasury note, here we go. So something a similar kind of price action. One of the things about this one is that the Treasury note market was a little bit stronger um, when it was moving up, because we can see that it tried to actually get very close to these highs here. Form some sort of a micro double top, and what we are looking at now is this market uh, getting sold off, not as much as the bonds because it's smaller duration, but now maybe it's really at the 20-day moving average, but maybe it can pull down a little bit, maybe up to this 200-day moving average. um, from momentum perspective, it's a little bit strong, but this kind of a sell-off, we'll have to wait and see what the follow-up will be like, whether it's going to have a follow-up where the market actually pulls back lower, or whether we are not going to get a follow through, which would be the nicer, in the sense that the rates might actually be stabilizing around here, so they might actually from a base and begin to move higher, or interest rates being getting lower. Okay, and then we'll also take a look at the dollar. So this is the dollar index daily chart. Here we go. This is what we had been discussing, that the dollar had been in a pretty long range for quite a while actually. So you look at since 17th of January, so it's been in a range for about a couple of trading weeks now. And today we get this big massive bull bar, and this is what we were actually discussing in the previous video, that the chances for this market to reach up to 104 104.25 is actually, the probability is higher because it broke out of this channel formation, and it looks like this is what it's gonna target. So for now, 104.25 is kind of roughly our target. The dollar is actually stronger today because of the economic data that came out. And look at this USD JPY, dollar really strong against the Japanese yen. And just look at this, it just found support from the structure here as well. I didn't get quite down to the 38.2% Fibonacci retracement. This is what we were thinking. So this means that actually the dollar remains pretty strong against the Japanese yen. And taking a look at the euro, so this is the euro dollar chart, and look at this pretty massive move to the downside. And yesterday, Thursday, we had some economic data come out as well, and we had seen weakness in the US dollar, just opposite of that today. And what we are looking at is this market has retraced 50% of this entire move from this low to this high. And if the dollar remains stronger, which we think it is, looks like this market is actually moving to its 61.8% Fibonacci retracement, which comes down around 107.10. But I could actually go and test these lows anywhere between 107.50 to as low as 107.10. This is what we are looking at for the Euro USD market now. Moving on to gold, here we go. This is the daily chart of COMEX gold. This is the futures chart, the continuous contract that I'm using, the trading view formation. So here, surprisingly, well, I shouldn't say surprisingly, this is what we had actually discussed in our previous video as well, when the FOMC meeting took place. Here, what we're looking at is that yes, gold did have a negative day today, but if we look at some of the other currencies such as the Euro USD, Euro dollar, and also the Japanese yen and the dollar, the gold still remain pretty firm. So this is telling me there is a pretty good amount of support for this, and perhaps what the gold wants to do is move higher, because we have seen stronger dollar, but the gold is actually relatively, comparing to other currencies, stronger. We haven't seen $100 move lower in gold. So it looks like that this pattern that we're watching in blue, 1-to-1 price projection around 110, 116, that might be on the cards. But before that, 2090 is where the 78.6% Fibonacci retracement is. So perhaps a retest of these highs from 20th of December 2023, and above that, 2110 is also possible. So this is what we are looking at. On the downside, we were watching for this market to get down to 1988. Now, in my opinion, the chances of that happening are getting slimmer. Most likely, it's gonna go and touch the 2090, maybe even also 2010 level as well. So this is what we're watching in the gold market. Now, finally, we'll move to the US stock indices, and this is the daily chart of the S&P 500, is the cash index, and the last couple of days just have been fantastic. Look how strong the market has been. Now, I'm not going to go into the discussion of under the hood how many stocks are actually making a move higher, where everyone is familiar with the Magnificent Seven. And in our tech stock analysis that we do, which I'll be posting tomorrow, um, we cover most of them. So here we have been watching this ABCD price pattern formation, which actually completed, and the market is above that. Two really strong days, today and yesterday. So it looks like this 5,000 level, which is a key psychological level, is on the cards. Market is making all-time new highs, and it's really uncharted territory, and of course just pretty much air above it. So now we'll just move to the ES, which is the S&P 500 E-mini futures contract. And here again something is similar. Here actually the market went to as high as 49.97 and three quarters. Couldn't really reach the exact 5,000 psychological level, but looks like I might actually do this in this market first. Um, and also this 1.618 extension, excuse me, 49.75 level has also been hit. So that's pretty impressive in this market. I'm going to delete this one, it's old. And here of course is also above the 1.618 expansion. So in the weekend review we'll take a deeper look at these levels and how our standard deviation levels did against this as well, and we'll have more projection levels as well. So now we'll take a look at the Nasdaq 100, and here um, Nasdaq 100, in my opinion, is actually getting slightly weaker compared to the S&P 500, the broader index. The reason is that we can see the S&P 500 making new all-time highs. We have seen here the NQs actually right at this ABCD pattern formation, just getting close to the highs it had made on 24th of January 2024. So it's just making a recovery high at the moment. Yes, the momentum is very strong. So as the S&P 500, in my opinion, moves higher, um, next week, maybe early next week, we could see this market making another high. That's also possible, but it looks like this market has maybe some sort of the acceleration is getting slow. How to explain this? The rate at which it had been accelerating to the upside, there seems to be a little bit of a slowdown in that, which should be expected because if the interest rate expectations uh, begin to, for a rate cut, begin to decline, then the tech stocks, which are quite sensitive to interest rate um, movement, could actually begin to suffer a little bit. Maybe a pullback could be more or could be quicker or compared to the S&P 500, for example. Now we'll take a look at the Dow Jones. So this is the daily chart of E-mini Dow Jones futures. Dow Jones, let me explain a little bit about this index. Dow Jones index is price weighted. It's not market cap weighted. So S&P 500, for example, is a market cap weighted. In Dow Jones, it's the price. So for example, if there are stocks which have a higher price and they move up or down quite a lot, for example, earnings come out, for example, and some earnings should be massively good for a higher price stock. That's going to have a much more influence on this index. It's only about 30 stocks in this index. So that's why Dow Jones is actually different compared to some of the other ones. However, when it comes to technical analysis and also back testing, looking at some patterns which happened 50, 60, 70, even 100 years ago, we have the most amount of data available for Dow Jones. So, for analysis perspective, Dow Jones is a really key index, and that's why I really like to take a look at this one. And sometimes the patterns, like for example, the timing that we are watching on Dow Jones index um, those things work really impressively well on the Dow Jones index. So again, from the pattern formation, ABCD pattern was completed, but the market is much higher now, which is good for the price action. And yes, so I think the Dow Jones is also kind of catching up from that pattern perspective with some of the other indices, S&P 500, or they are catching up with Dow Jones as it completed its pattern, and now it's actually slightly higher. Russell 2000 small caps. This is the one which is concerning in the sense that the price keeps on closing below the 38.2% Fibonacci retracement, um, and because of that, this pattern, that shaded area, it's still valid. Um, but what we have also seen is some support coming around here, around from the 61.8% Fibonacci retracement, but really needs to clear this 38.2% Fibonacci retracement level um, convincingly to the upside to consecutive daily closes, in my opinion, for it to go and challenge these highs again. Um, Otherwise, looks like this is a pretty strong resistance, and this pattern formation that we're watching, ABCD and the shaded area, that might actually come to fruition. So, thank you very much for watching the video. Good luck and good trading.